So let's start with how candles are formed. So I took this in the previous video, but we need to go much deeper into it. If we look onto this is how a basic candle is formed. Okay. So a green candle signifies that simply the price closed up on an upper side, and a red candle signifies that the price closed on the bottom side. So this is like price close bottom, and this is like price close on the top side. Now there can be different colors. Okay, some people use hollow candles also. So you might find that there is no color up here. Like it will be like this. So this is without color, and you will find up this, and this can be blue, black, whatever it is. Okay, the main thing remains the same. It's just a variation that people do, whatever looks good to them as per their eyes. So someone wants to see it hollow, they can see it hollow also. Coming back, this is indicating that the close was more, this is indicating that the close was less. This is also called as shadow, which is also called as wick. So wick and shadows both are same thing. What is this signifying? For example, price opened up at 100. In the intraday, there are a lot of players. Okay, there are a lot of players that keep on buying, that keep on selling, which take the price to the high of, for example, 103 rupees. But again, then there were a lot of sellers that again came into force, and they started pushing this downwards. They pushed the price here, example 96 rupees. But finally, at the end of the day, which is like 3:30, it closed at 98 rupees. So the body is what? From 100 to 98, this is the real body. And the upside and this downside, the shadows, these are called wicks or shadows. Similarly here it will be completely opposite. So the open will be on 98, the low will be on 96, the close will be on 100, and the high can be 103. This indicates bullish simply because it's positive. So if this is happening on a day, you will see that the stock is positive in percentages, and if this, it will be bearish in percentages. Now let us look onto the candles ranging from bullish to bearish and how does they look. So these are the candlestick ranges, and this ranges from bullish to bearish, the neutral being in center. Now why this will be very bullish? Because it is complete full of body. There are no wicks. So the buyer started from buying, and they simply bought at each prices, and the sellers were not in force. Here some of the sellers then came upon and started selling it. So that's why we see this wick. So here there are no wicks. There are no wick on the top. There are no wick on the bottom. This is the most bullish candle that you will be looking onto if you are seeing any chart. Second after this will be where there is a top wick, and the close, if you look closely into it, this close is more towards the second half. The price closed onto the second upper half. In the upper half, the price closed upon. So that's comparatively less bullish, because there are some sellers that eventually came upon here and just dragged the prices. Next will be where you will have a long wick on the upside. A long wick on the upside is simply telling you that the price and the open was actually very bullish. So this would have been the open, this would have been the high, right? Entire day there were a lot of bullish sentiment that shoot up the price. It finally touched up this high, but it saw some sellers that were simply like waiting up for this price to come so that they can sell up their shares, which again dragged down the price. But as compared to this, it doesn't close in the second half. It closed on to very low. So this is comparatively less bullish. We look onto this now. We have a wick on both sides. We have a wick on here also. We have a wick on here also. So we are moving from bullish to the neutral side. So this was the most bullish list comparative to list. Now this is more towards neutral. It's still bullish, but not that bullish. It's not that effective. Why? Because we have a bit of indecision here. When I say indecision, it simply means that overall the bull versus bear, they're fighting equally on both sides and no one is winning right now. So here still the buyers are winning comparatively, but when you go to here, no one is winning. This simply open is equals to close. In the intraday, there was a lot of fight. There was a lot of fight between bull and bears. The bull took this price to this high, and that's why this wick is there. But then the sellers might have come and again dragged by this price to back to this lows. But again the buyers came. Again the buyers came and the close was the same. Due to those reasons, it's like an indecision. So when you're seeing such type of candle, it is simply telling you that you can't say what will happen next. It's simply an area of equilibrium between the buyers and sellers. So that's about bullish to neutral. If you look onto that, this is now comparatively a bit bearish. And this is like now a mirror image of all these candles. So this will be completely the mirror image of these candles. Here, this was the open, this was the close. So it was still green. It was still green because the close was higher than the open. But here, this was the open and this is the close. Intraday, a lot of fight between buyer and sellers. The buyers took the price high. Again, the sellers came in force and took the price at this level. Again, the buyers came and finally they closed up here. So they were not able to come back upon the same open level. So that is telling you that though the buyer was in force, after touching this low, the buyers was in force and they pushed the prices again back to some upper level, but they were not able to do it completely. And due to those reasons, we are seeing this candle. The next will be this candle in which we have the top. Here, still it's red. This one is more red and this one is more red. So, another way you can understand, the more green a candle looks, the more bullish it is, the more bearish, or I say the more red you will see a candle, the more bearish it is. So, a full candle that have no wick is simply telling you that bull or bear, either each of them is in force. Like here, the bull was in force completely. Here, the bears are in force completely. So that's like a brief of different type of candles that you'll be seeing. Now we'll go more deeper into it. We'll go more deeper into the popular candles that are very important. To know. The first one is doji. Now, as we look down to this represents the neutral one. This represents an indecision. So it's called as doji. A doji area where no one is in force. Buyers and sellers are simply fighting upon. For example, the price was in an uptrend and then you suddenly saw a doji. So now the entire trend was towards the bullish side. Okay, it was an uptrend and after that there is an indecision. So when after an uptrend or when after a downtrend you are seeing a doji, it simply is indicating you that though the bull was in force from this point because price was continuously going up, you were seeing a good bullish candles, but suddenly now trend might reverse. So this doesn't mean that the trend will reverse the next day or the next week itself, but this is just as a confirmation. And you need to look on to different things apart from this also. So along with the candle formation, you need to look upon support, you need to look on to resistance, which will go further in the coming videos. So using all those things, you need to make a decision. But when you are seeing up such type of formations, you need to stay very cautious. So these all candles make you cautious about something can change now and you need to be alert. that, and you need to just revisit upon whether everything is working in your favor or not. Similarly, the stock was going down and then there is an indecision between buyers and seller, an indecision between the supply and demand. That makes you cautious that does the winning side is changing. Like here, does the winning side, which was the bull, is changing towards the bear? That's a question which comes upon when you see this after a good uptrend or after a good downtrend, that whether now the bears are an equivalent force. In doji, the open and the close are very similar. There might be few small gaps in between, like here we see that there is some real body also, because in practically it's not always that the open will equals to the close, but you need to understand that there will be very less difference between the open and close, and there will be wicks around. So the price opened up here, the bulls took in force, but somehow they are not able to manage for the entire day, and as a result the sellers again came, took the price to this low, but again the buyers came and took the price to where it was at the opening. So it's just like some buyers are coming in force, then the sellers are coming in force, and it's like just an indecision that who is more prevalent. You're not able to understand who is more prevalent. That's what doji tells you. Now there are different type of dojis. So we'll now look onto that. The first one is gravestone doji. Now the name sounds a bit odd, that why gravestone doji, but it's very logical. Okay, these all names are very logical. Have you seen a grave? Grave is like, you'll find it very thin from here and then you'll find it in this manner. So that's gravestone doji. It's in the shape of a grave. And why it is called grave? Because look onto here. Open and close is still very same. Okay. But this is not on the middle or on the top side. It's at the bottom part of the entire candle. It's at the bottom part. And that is what it is telling you, that all the people who bought around here, they now went back to the grave. So the price opened up here. Bulls were very strong. The bulls were simply very strong and took the price to this high. Example, this was 100 and this was 110 rupees. So it's like a 10% movement in an intraday. But that was not sufficient for the bears to relax, for the bears to go away. That was not sufficient, and they came back and took every buyer that was in between. So if somebody bought at 105, is now again back to the grave. Somebody who bought at this high, 110, thinking that it might go further up, is back to the grave. And hence the name gravestone doji. So don't go too much into names. Basically, if you will understand the psychology behind it, you don't actually need to remember of the name, because now this is actually telling you that the sellers are very high at this point of time, and they came in full force when they saw the price coming up on here. So that is simply telling you a good resistance above this. For example, the trend was going on to very good on an upside, and then the bulls were very sure that the price is going up, so there are no chances that it will come back down. As a result, a lot of people went into this time. The price went up, but the bears surprised all of them. Who thought that this would keep on going on, and as a result, it again closed back here. And like simply the bears butchered all the bulls and put them back into grave. And this is indicating you a good resistance after the rally. If the stock is already in a downtrend, it doesn't make much sense, right? Because the bears are already in force. That's why the prices are falling. So if the stock is already into downtrend and then you see a gravestone doji, it is not signifying anything that the price can change. It's simply telling you that the entire trend might keep on continuing. However, if you see this after an uptrend, then it's useful. Now, let me give you an example of gravestone doji and doji so that you understand it better. So this is an example. So as to make you realize that these are not just some shapes. These are very important, and this gives you a really good insights about what's going on. And let me tell you one fact: majority of the people don't see it. Majority of the people don't even see it. Fundamental investors never see them. For example, this is the chart of Rain Industries. If you look onto this, stock was in a clear uptrend and not just an uptrend. If you look onto this, this was like what? Around 40 rupees, and this was around 400, 440 range. This was like a 10x. This is a monthly chart. This was like a 10 bagger in a span of what? 1.5 year? However, look what happened after that. It was in a good uptrend, and then you saw of this. This is a gravestone doji. Now, the open is exactly not equivalent to the close. It is but very similar. So you see a long wick on the upside and a very short wick on the downside also, which is okay. Okay. In textbooks, it looks good, like open should be equal to close, but it's okay to be a few price here and there. So the bulls came on to full force, and they were continuing to come on to full force here also, but the bears didn't like it, and they just suddenly attacked them, and everyone who bought of this thinking that this will keep on continuing got butchered up, buried into grave. And look onto what happened after that. After that, the price again back to what? Entire rally gone. Now you might ask a question: if that was so simple to look onto this, then why people actually don't look onto it? Because they don't simply understand it, and they neither try to do it. Fundamental investors never use it, and that's one of the reasons why fundamental investors might have a three bagger and again it's back to the same price, because exits are a problem. Taking entry is okay, but exits are a problem, and majority of the wealth comes up. We all feel good that yeah, like we have a 10 bagger, it's again back to the same place where it started. So you got a good indication about here that now the sellers are not happy with this price, and they are like hitting the buyers hard. So this makes you cautious. Okay, so this is not just one thing that you look onto this and you are just selling up the stock, but you need to be cautious. You need to be cautious. You need to revisit the entire fundamental story. You need to revisit the growth part, and you then need to set up an exit plan once you see up this. That now I need to be cautious and I need to go out at first sign of weakness after this. So continuation, then a doji, gravestone doji, and the reversal. I have more examples for you. Look onto this. This is an example of Bharat Rasayan. If you look closely again, you'll find doji and gravestone doji both working onto this. So this was again a good trend. Then we saw a doji here. It has a little body, which is okay. Not exactly a doji, but it tells you that now there is an equilibrium between buyers and sellers, and that's why you're seeing up those big wicks on the both side and the price opening and closing on the middle part, and the range of that is very less. So understand, this is again on monthly, and why I'm showing you on monthly, because monthly is the most powerful. The wider your time frame, more powerful everything is. The wider your time frame, everything is more powerful, because these are now larger trends. You can't simply ignore them. So if you see some kind of gravestone doji formation of monthly, you need to be extremely cautious. Look onto this again. After this corrected, then it started moving up again from here. This is again a gravestone. Again a gravestone. This is like recent month only. August 2020 month. So again a gravestone doji here. Now what will happen next? Price is already moving down, and then let's see. And if you also look onto the volume was also good here. It's not above this, but it was very good. It was more than half of what happened up here. So price, volume, and some exit rules will help you in getting out of such situations. And that's why I say when you combine up your fundamental understanding, for example, you are finding the company very undervalued here. You're finding the company undervalued here also. But when you know and understand technical analysis, and you know that now there is something going on with this stock, and there are a lot of sellers who want to just sell up the stocks. The sellers are gaining more strength. Then you can combine both and take a decision. I have more example for you. Let us move to the next slide. And you'll find again, this is chart of Sunflag Iron. Look onto this, a good uptrend. So that consolidated here for some time. It again started to breaking out from this region, but this is again a gravestone doji, where you have a long wick on the upside, very small wick on the downside, and the price open and close are very near. It's again telling you that now the overall strength and the overall trend might change. You can look what happened after that. It took some time, but yeah, it followed upon. Next one. This is onto the daily chart again to show you that it works similarly on daily also, not just in monthly, weekly, though it will be more powerful in weekly and monthly because those are much wider trend. Now, if you look onto the daily, look onto this, the price was around 280 levels. It filled upon 240, and this was like in complete downtrend. Now, look clearly onto this, the body is so much red. See this, we discuss onto this bar. This candle is like most bearish because we don't have any wicks up there. And it's like a continuation of the downtrend. But look onto what happened then suddenly up here. What happened suddenly upon here? The bears kept on thinking that it will continue, but suddenly the buyers came here and it led to an indecision here. An indecision that now the buyers might again come in force. And then if you look onto the subsequent candle, it gives you a clear indication that now the bulls are back into force because this is like a very bullish candle, a big price movement, and the price also closed on the upper side. You also look onto it, look onto the support that went upon here. So whenever you are seeing in downtrend, you'll find some support levels up there. And in uptrend, there might be resistance also. And see onto this, there is a lot of support zones here. So the stock rejected once from here also. It rejected again from this area. It rejected again from this area. This is a clear-cut support area. This is a clear-cut support area for the stock. And at the same time, you find a doji after a good downtrend of 20%. Now you are able to connect all the dots. The next is Dragonfly Doji. Now, the Dragonfly Doji is exactly opposite of Gravestone Doji. So in Gravestone Doji, you actually got buried in the grave, but this Butterfly Doji, if you look onto this is the open. There was a lot of selling pressure at the opening itself. There was a lot of people who were waiting for selling up the stock as soon as the market opened. And stock opened, the bears came in full force. They sold at every level. But finally they reached a place where the buyers came in. The buyers might found it that now the stock is undervalued and now the stock is into good risk reward zone or whatever their thought process will be, but they came into an opposite thinking of what the bears were thinking. They started buying, and again on the closing you'll find that this open, the stock closed up here. So this is also called as butterfly or dragonfly. It's the name got derived from this dragonfly. So you would have seen this fly flying around here and there somewhere. Okay. So This is like more, if you see onto this, this is like the top bar, the real body. This is like the body, and this is the complete shadow. So this is not exactly open and close, or not exactly same, but it's okay that if it is somewhere here also, it is fine. It's okay. It's okay. The psychology remains the same, that more and more buyers came. So this indicates that the bulls are taking control suddenly. Now, where this doji will be meaningful, this doji will be more meaningful in the downtrend, because if you look onto upside, the price is moving on to upside, and then you find up this closing upon here, it's not making, and it's not telling us something new. It's telling that the buyers are in force which were already in force. So this is more useful on the downside. On the downtrend, if you see this, then it's suddenly telling you a change of sentiments might be coming. And so the stock is going down. The bears, the sellers, were thinking that it will keep going down. So they sold up, sold up, sold up. But at some point, the buyers came into force. They thought that it's undervalued or it's too much at a cheap price, and they again keep buying and buying, and the price closed up where it opened. The trend was bearish, but the bulls attacked suddenly, butchered up all the bears. So people would have sold at every level, but at every level, the buyers bought it, and closed on the top. It indicates a good support zone. It indicates that when the price is reaching up here, there are people who are ready to buy up this stock at that price. Now, let me share with you some examples of this. So this is a chart of C8 Limited. If you look onto this, this was a clean downtrend. The stock was going down, 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 down here, but it found up a dragonfly doji up here. So look onto this, there's a long down wick, and the open is near about the same. So that gives you an idea that the trend might now reverse. And you look onto the next candle, it's more of a bullish candle. So combining these two knowledge, and then another one is that look onto this, as I told you, that you will find this at some support level in past, from where the buyers are coming in force. So look onto this, the price is also rejected from this area. Again, here you'll find up that this acted as a support. Here also you will find that this was acting as a support. So if you combine up these now, we'll come up to this area. And it tells you that whenever the price is reaching up here, people are actually buying it up. There are people who simply buys up when the price is reaching up to this level. So a good support zone. Also, you need to look onto the volume. See, look onto the volume in this case. This is a huge volume, which is telling you that the buyers are back with a bigger force. With a bigger force, the price is reacting the same. The volumes are also telling you that the bulls are now more prevalent in this candle, and they're coming back with full strength. Support, there are good supports. So combining all of this can tell you that, yeah, there can be now trend can reverse. Now this is the weekly chart. So that's how powerful these things are. And when you combine up this with your fundamental understanding, with your fundamental knowledge of all the ratio analysis, fundamental analysis, everything, then it's simply powerful. The next one is umbrella and inverted umbrella. So as you can understand from the name, all these names are very similar to shapes. So don't get too much lost into the shapes and try to mug up the shape that no, umbrella was looking like this. Instead, if you understand the name, and if you understand the psychology of supply and demand behind the formation, you don't actually need to remember any name. Like I don't actually, whenever I look up that kind of dragonfly, it doesn't come to my mind that this is dragonfly. What I understand then is that the buyers are coming back. When I see that gravestone doji, it's not always that comes back, oh, this is gravestone. What comes into my mind is that the suppliers are very, very harsh now. And they are simply not liking. They're not liking this advance. You might be sitting on an overvalued range. You might be sitting on some fundamental change that might happen in the company. So there can be various reasons for that. Now, this is very similar to umbrella. So you would have seen some umbrella. Umbrella is like this. Okay. And this is very similar to this. And don't confuse this with the dragonfly doji. Dragonfly doji, your open and your close should be equal or very near. Should be or very near. Like body like this is okay on this. But if your body is like this, it's actually not a dragonfly doji. However, they both tells you something very similar. They both tell you something very similar. And the color is not important up here. Okay. Green or red, the color is not important. What would have happened in this if you look onto it from a psychology perspective? What would have happened? Okay, the price opened up here, but in intraday, bears were more prevalent. Because that's why they sold at every level. But they finally found some support. The buyers started coming from here, and the buyer simply took up every sell and closed back the price to the high. Also, this doesn't have an upper wick. Understand that this doesn't have an upper wick. Simply, this umbrella doesn't have something on upside. But in reality, you might find some small wicks. So if you're seeing some very small wicks on the upside, it's okay. It doesn't changes the psychology part. It doesn't changes the understanding. Even if you find some small part upon here, then it's okay. It's not a problem. If you look onto this, the body will close on the upside 20%. And the balance, the entire shadow is like 2x or more of the body. So if the body is like 20%, you will find 3-4x. Yes. So at least your shadow should be at least 2 times of your real body. And the color is not significant. No or very less shadow on the top. However, if you invert this umbrella and look onto this is called as inverted umbrella. The body will be in the bottom 20%. And what this is indicating you now? This is simply indicating now that the bulls were in force during the day, but the bears finally butchered it. The bears finally came and took the price lower. Example, it opened up on here. Bulls were high during the day. They took it to this point, but the sellers were maybe waiting for this price to come so that they can book their profits. So they finally started booking their profits. At every level they booked profits, and it finally closed upon here. So that's why it is red. However, in both these cases, the color doesn't matter much because the psychology is more important upon here. In here also the same thing happened. In this case, this would have been the open. The bulls were very prevalent during the day. The sellers were simply waiting for this price to come so that they can be out of the stock, so that they can book up their profits. And finally they came, they sold at every level, but they were not able to take up the open. They closed somewhere above the price open, and that's why you see it green. So that's umbrella and inverted umbrella. Now, how to use up this umbrella and inverted umbrella, I'll tell you in the next video that how you need to combine it with the trends and what are the different patterns. Now we understood about the different type of candles. Let me take you back to the first diagram. Now let me tell you one more candle, which is this bullish one and this bearish one. The most bullish and most bearish. It is also called as Marubozu candle. Marubozu candle. Now basically bald. So bald in Japanese is called as Marubozu. So this is bald because it doesn't have any wicks on either sides. That's why it's like a shaven head, complete bald, and hence the name Marubozu candle. So these are like the Marubozu candle is like the most bullish and most bearish because it simply is telling you that the entire day only one side was prevalent. In this case, only one side was prevalent, which was bulls, And in this case, only one side was prevalent, which is the beards. This is like we saw a doji. It just have a long wick, so this is also a doji. Here, this is more of an umbrella. This is again an umbrella. Sorry, this is an inverted umbrella. This is an umbrella. Okay, so that's about different sort of candles and what is the psychology behind those patterns. And these are the most powerful: gravestone, dragonfly, and the simple doji. These three type of dojis are very important, and I have shown you examples to make you realize that what happens after next and why you should not ignore up this whenever you're doing any analysis. So now we'll move to the next part. Next part is towards the patterns. Now, what are the different type of candlestick patterns that we'll discuss on in the next video. Before closing out this video, I want you all to write down your top 4 learnings. Write down your top 4 learnings from this video in the comment box and let me see what you have got from this video. Thank you for watching.